Kappa? One, two, three. Yes, we are live, I suppose. hmm Let's see. Bitcoin and silver. Watch party. Sure. So we are getting close in the 63K club actually. We are in the 63K club right now. Let's go on a 1 hour chart. Yep. So we are getting really close to the all-time high, which is pretty nice, I guess. Hide a few of these bookmarks because nobody cares about them. Any links here? No. Soon. So yeah, I want to comment a bit on silver because I did a video like probably a week ago or something like that. And I said at that time that usually it's a good idea to buy when the RSI is below 30. So yeah, this was a really good time to buy, right? 10% up, give from the lows, obviously. If I would have bought, I would probably would not uh, buy right at the bottom, but somewhere around here. So yeah, keep your eyes out on the RSI whenever it goes below 30. Obviously, it can go a lot lower if we look at March of 2020, you know. Probably buy here if you think you're smart, and yeah, it keeps going lower. You know, from here. It still went lower, 20%, but overall you're up. You would be up 60%. So yeah, I still think it's a good idea to DCA whenever the RSI goes below 30. And I mean, not really DCA, but just go pretty hard in the market. And mostly for silver, I just buy coins, you know, buy physical coins. I don't really want to, you know, to play the stock market. I'm just buying coins because coins is the way to go, in my opinion. For silver and gold, I am planning to buy probably next month. I wish I bought here in this area, but uh, I we had to buy some appliances and there was no more cash left to buy anything else. So there's that. Let's go. I mean, yeah, silver is pretty boring. I mean, today silver put a nice, you know, currently 2.8%, but it did it was like 3 and some 4% at some point for the day. So, which but it is really interesting. Like I kind of saw a pattern whenever the U.S. stock markets open, silver is getting fucking slammed. Like it's almost every time. For example, yeah, well, here went up. Here, I think. Yeah. During my timeline. No, my not really timeline, but time zone. Silver went up on some news. Probably this was the inflation news. You're going up 2.5%, and then you go in the American markets open and silver is getting slammed back down. Yeah, same story here. Same story here. Before markets open, goes up. Markets open in the US, it's getting slammed. It's like almost every time this this happens. So for me, the best time to buy silver is like 1 or 2 hours after the US markets open. That's pretty much the best time, especially if you're buying physical silver. Just wait for the markets in the US to open and you're gonna get a discount probably 1%, it's worth like let's say tomorrow I wanna buy silver. I'm not gonna buy it in the morning. I'm gonna wait until 5, 6 p.m. in my time zone. And yeah, just wait for the US markets to open. Maybe I'll get a discount of 1 or 2% for the day. And that's pretty nice. So let's check on Bitcoin because yeah, this was something drawn. I was explaining to a friend way back here. I was saying, well, there's a possibility it goes down from here, somewhere in this area. Of course, it didn't. I told them, it might also go up and then correct somewhere in this area, and actually did come in this area, but a lot later. If it did correct it back then, it would have fallen to like 20K, but it didn't because Bitcoin was on crack. Uh, Take a look at the RSI and it went like 94.7. It's probably higher than the yeah, it's probably higher than the previous all-time high back in 2017. That was pretty crazy. That was a pretty crazy. Uh, how do we call it? RSI, strength of buyers pushing the price higher was extremely overbought on the weekly time frame. And also on the daily. We take a look here, the RSI when Bitcoin went up to 42K was higher than the RSI when Bitcoin went up to 65K because this move was a lot stronger than this move. Uh, this is actually a classic pattern, price keeps moving up slowly and the RSI is doing lower highs, and this is usually called the divergence between the price and the RSI, and usually the price will follow the RSI at some point, and it did. This happened. I kind of missed this move. I didn't sell here, but I did buy Bitcoin and some other coins in this area. Bitcoin did really great. Like the other coins are Link and Cardano. Mostly Link. I bought Link in this area, so it's not. I'm pretty much. It's a net wash so far. I did buy a bit here, but I also bought here. So probably let's call it 10% up. My average is probably around here. Yeah, 10% up. Not great, not terrible. But Bitcoin, oh my god. Bought Bitcoin, let's say in this area, 80%. Yeah, Bitcoin is looking strong. I am going to uh, take a few profits around 70k. Take the profits, move them into gold and silver. Or actually, I'm gonna buy a few stocks because I'm using some other reserves for gold and silver. Yeah, so I'm probably gonna buy HP because HP is a really good company, really good business. So yeah, let's actually dive a bit into that. Any leaks? No. So yeah, I learned a lot from these guys on their channel, which I highly recommend watching Everything Money on YouTube. This is their site. I'm paying to have access to their data. I mean, you can have this for free, but let's say on Seeking Alpha. No. Yeah, this is another stock that I have on my watch list. But let's go to HPQ, right? And you have you have the last 5 years for free data, and it's usually enough. You don't need more. And what you're looking at a company is to have obviously increasing revenue, to have a low multiple of earnings, price to earnings, to have a strong balance sheet, low debt compared to the free cash flow, and obviously the most important of all, increasing cash flow and what's it called? It's quarterly. Let's go on annual. Increasing cash flow and the multiple uh, of cash flow, you know, should be about the same as the PE when you're trying to evaluate a company. So let's say usually a PE of 10, it's considered undervalued. Well, if your market cap is 10 times higher than your free cash flow, that company is pretty undervalued. And the nice thing about their uh, software, I think they also have the app on the phone. The nice thing is that they have they do the math for you already. You're also looking for a high uh, return on invested capital. they usually about above 9%. HP is really high, 50%. And this is the in the last 5 years, so it's pretty insane. Paying good dividend, they can cover the dividend. You know, they are paying 957 million this year, and their free cash flow this year is 5.9 billion. So yeah, let's go. How do you calculate cash flow? Well, you take your cash from operations and you subtract the capital expenditures, and then you get the free cash flow. So yeah, the other sites don't do that for you. I mean, yeah, you can do it, but this is easier. And not only this, that you usually, when you look from, like, from a distance, you don't even need to come here. You just go here to the 8 pillars, and you check here. 5-year PE, 9.7, return on invested capital 50%, increasing revenue, increasing profit. They're buying back shares, low long-term liabilities compared to the 5-year average free cash flow. They are growing their free cash flow over the last 5 years, uh, and their market cap to the 5-year cash flow average is again really good. So yeah, a lot of people are saying that HP is probably a dying company, but doesn't seem like it's dying to me. It seems like they have pretty strong cash flow. You know, when you're doing 4 billion, 2 billion, 5 billion in free cash flow, and your market cap is what, 34 billion, market cap to free cash flow is 9. I think you're a pretty good company. You have a pretty good business, especially with the return on invested capital. So uh, they invest $1 to get a profit of 50 cents, I think, something like that. It's translated. They're pretty good. And I am right now, yeah, I should have probably bought in this area. Yeah, it's coming here to some resistance, short-term resistance. Let's make it red, no, green, and pretty white. It's a lot of short-term resistance in this area. They're coming to them 100 and 200 daily moving averages. Pretty good resistance. I wish I knew about HP in this area, but I was not really investing in 2019. And yeah, and I also had to save some money to get a mortgage. And now that we have a new apartment, fixed rate, I'm not really keen on paying too much in this inflationary environment. So I'm just looking to buy good quality companies like HP, like Intel, for example. Let's go to Intel a bit. Again, they are low debt, increasing cash flow, and they are a cash flow powerhouse. They are doing 16 billion, 21 billion, 13 billion, 12 billion, 11 billion, and it's increasing over time. They're buying back a lot of shares, and buying back shares is really good when the company seems undervalued. It's really, really good. increasing revenue, increasing net income, good return on invested capital. The Intel is a great company. So I'm also looking to buy right now Intel and HP. There's gonna be some pullback, most likely, pretty soon. Intel also is coming here. This seems like an area of resistance, and this is probably the 100 daily moving average. So I'm looking for Intel to come back down, probably in this area, 52, and I'm gonna buy either Intel or HP because these are the most undervalued high quality stocks that I know of. I also want to buy Cisco at some point. Uh, but you look at the multiples, they are a bit overvalued. Oh, they also have a stock analyzer, so you can put in some assumption here. You know, you're gonna hit analyze and get some price targets. I think for Cisco, it's about 30. That's actually the one. Let's do low and high. Actually, just do one. Let's say they continue to grow revenue, buy back shares, profit margin. Let's keep it at 18. Free cash flow margin 27. PE. Let's go for a 15. 15, and we want an annual return of 12.5. Yeah, so yeah, based on earnings, which I don't really like earnings because it's really manipulated data, like cash flow, a lot more. So below 35, they're looking hot on Cisco. If we look at a 52-week range, they actually were in this area, $35 back in October, yeah, during the presidential elections. So looking at the imaginary lines, because I mean, let's say Cisco could fall in this area, $40. I will buy at $40 for sure. If Cisco falls in this area, I'm a buyer for sure. But that's a hefty drop, 27%. That's a hefty drop, I would say. But it's not impossible. No, everything is possible in the stock market. They did drop, before the vid came. And look at this. They did drop here, 20%. So it's not impossible. They also drop here, 23%. Again, not impossible. Let's check on Bitcoin again. Yeah, it's pretty much price discovery. I mean, the only thing setting Bitcoin back is the peak back in May. So it's all right. It's all right. So let's go back to Cisco. CCX. Who are you? Let's see. CCX. This actually. Oh, okay. This is actually terrible. Issuing shares like crazy. Lots of debt. Expensive. According to the multiples. Yeah. I don't actually want to look at that anymore because it's making me puke a bit. So I am actually hoping for silver to drop a few percentage points in the next month. Let's call it that. Drop for 4%. I would be pretty happy because that's about the time I would buy. I'll probably buy anyhow if it stays in this range, of course, which it probably will. Like long-term averages are starting to move down. That means momentum is negative, and it depends a lot on what gold got. Oh my god, gold also got clobbered when the market opened. Like, see, do you see this? U.S. market opens and it just falls. Look, yesterday, same thing. U.S. market opens, it falls. I mean, come on. Market opens and then it falls. Market opens, I mean, it's just ridiculous. But nice, I guess, for gold bugs. Pretty nice. Let's see what other coins are doing. Okay, so Bitcoin is doing great. Let's go to coin market cap. So Bitcoin is leading the way. Dot also. It's pretty nice. I don't have that. I cannot buy that on my crypto brokerage account, I guess. It's not available. I guess it's fine. Bitcoin is enough. Bitcoin, Cardano, and Link. Yeah, these altcoins are up a bit, but most of them are trailing Bitcoin by a lot. So yeah, Bitcoin is the market mover. I mean, if we take a measure move, here in 20th of July, it's 112%. Let's see, Ethereum is actually higher. So yeah, Bitcoin and Ethereum are the kings of the crypto market. It's overall, cryptocurrencies are risky, but if you're into them, Bitcoin and Ethereum are the answer for beginners. And if we look at Link, and Link is up as well actually. A lot. Yeah, so it's not doing too shabby, was actually ahead of all of them probably. that I have. I only have Bitcoin, Ethereum, Cardano, and Link. But right now is not doing much, which is quite sad. It's probably a reaccumulation zone in this area. Let's look at a weekly chart. Can I go on? No, I cannot. Okay. I'm actually, yeah, let's go to charts. Coin Trader Pro, because you can choose this 3 day and it's not 1 day, it's not 1 week, and it's giving a really good overall view. So when did Link, what happened? So this move kind of looks like this move. Also looks like this move. So are we expecting something like that? I mean, it's possible. And look at this trend. I mean, it was this trend, but let's do two trends. Why not? You know, let's say Link has a new trend. No. I mean, it's just a imaginary line, but could we expect Link to break out soon? Kind of trailing along this line here. Could we see Link doing something like that? Go to 70 bucks. That would be pretty nice. I would surely love that. Yes. Anyway, I think I'm kind of expecting Bitcoin to put in like a 70k, which is not really high, for Bitcoin. But I am expecting to go like 70k in like probably next week, 10 days, let's say by the end of the month. I mean, it could go a lot higher, but I'm gonna sell a bit at 70k. Just take some profits off the table and sleep better at night. Take some profits off the table, and then I'm gonna buy some real stuff and get my profits out of this Fugazi stuff, because Bitcoin is Fugazi after all. It's not real. It's fairy dust. So when I'm gonna get those profits? Oh Jesus, this is bright. I'm gonna buy some Cisco. Not Cisco, sorry, some HP or Intel for sure, because they are just extremely high quality stocks. I kind of regret not buying HP like last week or something. Yeah, when it was last 13, was it on Wednesday? Because I did have some cash on my brokerage account. I didn't buy. That's actually pretty stupid of me. Don't let it happen next time. Just buy on the dips. Of course, just buy on the dips if you're sure that the business you're buying is high quality. When we look at the market cap and their multiples and data, HP is quality. Yeah, I mean, they're doing stupid stuff with the printers. You know, your printer prints 20,000 pages, then it stops working. I mean, come on. It's a bit of conspiracy right there, but yeah. The laptops are pretty good. I think I do have a laptop from HP at my job. Yeah. Actually, you know what? Let's look. This is Lenovo trading. Lenovo. Actually curious because I do like Lenovo laptops. Lenovo Group. Let's see. Not enough data. Lenovo stock. Oh, it's Chinese. Okay. Well, now we have to go on seeking alpha. Because unfortunately they only have good data with it's probably pretty young. I mean public. I don't know. Let's see. Oops. Monthly. Yeah, 2017. So let's search for Lenovo here. LNVGY. Oh, I mean whatever. It's yeah. They do have. Oh, okay. They do have some data. Oh, pretty good on the last year. 26%. I like that. Price to sales. Do they actually have a market cap of 12 billion and they have a revenue of 64 billion? That's pretty crazy. Let's see here. Yeah, there's not enough data here. Market cap, yes, 12 billion. I mean, it's China. I love China. No, I don't. Yeah, okay. They have really good revenue. You know, their revenue went up 50% in the last 5 years. See net income pretty low, but that's why we go to the cash flow because it's not so much manipulated data. Yeah, 3 billion, 3 billion, 1.6, 900 million. That's a minus right there. Minus 1.2, and this is a plus 1.7. So let's do an average because they look pretty. The 12 billion market cap, they look pretty undervalued, I think. So let's do the last 5 years, and we're not gonna take the 12. Actually, we're gonna take them. Actually, let's do the last five, call it 5.5 years. 2.1 minus 0.75 plus 1.47 plus 2.2 plus 3.65 plus 3.8, call it. Minus capital expenditures 0.46 minus 0.5 minus 0.54 minus 0.66 minus 0.7 minus 0.77 divided by 5.5, 5.5 years, right? So that gives us an average free cash flow of 1.6 billion. And let's call it, we want to pay a multiple of 15, 24 billion market cap, and they are 12 billion. Oh my god, high dividend yield. How much is that from their free cash flow? So that was, what was that? 1.6 billion? Yes. Okay, so they're paying out of 12 billion multiplied with 0.058, 700 million. That's a pretty high, pretty big chunk of the free cash flow. I mean, it's the average, granted, is the average because the last year, I'm actually kind of punishing a lot, taking this one into account. But whatever, we want to be conservative. So they are, what was the multiple? 12 billion market cap divided by 1.6 billion average cash flow. That's 7.5. That's pretty low. Was there P in net income? Yeah, P was probably negative or something, but I don't. Oh no, okay, it's low as well. Wait, net income. What the fuck? Here, yeah. P is what? 12 divided by 1.45. 8.27 PE over the trailing 12 months. That's pretty nice. Hmm. Lenovo. Anyway, if we take only the last, call it last 3 years of free cash flow, what do we have? 1 point, oops, 1.6 plus 2 plus 3 divided by 3, 2.2 billion. So 12 divided by 2.2, 5.5 multiple of free cash flow. That's really, it is a Chinese company, so you really gotta trust their data on that. That's what. This is a big gap down. What the heck? Let's go on some finance on Yahoo. What are they saying about Lenovo? This is probably a Hong Kong stock exchange. Yeah. Yeah, bro. The dividend is maybe even lower. Yeah, dividend is lower. So I don't know why second alpha is that high, but okay. What do they have? Yeah, 3.7. So yeah, actually the dividend coverage looks even better now. I kind of like it. Huh. I kinda like it. Lenovo. Let's look at Asus. Are they publicly traded? Asus Tech. Taiwan dollars probably. Uh oh, this looks promising. Where is it? My Asus? Uh-huh, these are computers. Yes, yes, it is them. I heckin' love Asus. The financials are in Taiwan dollars, probably. Free cash flow is all over the place. I don't like it. Okay, goodbye. Nice knowing you. Okay, so let's go for Lenovo. Oh, so okay, they dropped 17% because they withdrew their listing to the Shanghai Stock Exchange. I mean, what the heck? Yeah, it's looking kinda undervalued. These guys are pretty much saying the same stuff. So yeah, I just wanted to see why did it drop 17%. It's just some news. I mean, and honestly, they look really strong on the cash flow. I like that. Let's see the debt. They have it here. Long-term debt. Long-term liabilities 7 billion. Okay, okay. Let's double check that. Triple check that. Why not? So this is in US dollar. 7 billion. This is annual. Last report. This is balance sheet. Long-term. They don't have them together. That's bruh. 3.3 plus 1.36 plus 0.44 plus 0.4 plus 0.32 plus 1.27. Yeah, 7 billion. I mean, why are they not just what? They they have total current liabilities. Okay, just put here total non-current liabilities. Is that so hard? Actually, yeah, the simplest way is to subtract, 36.3 minus 29.2. Yeah, 7 billion. Okay, so they have 7 billion of long-term debt. Cash flow is 3 billion, so they can pay that debt in max 3 years. Current assets and current liabilities. Yeah, they have a bit of a problem here. Why is it so high? Current liabilities, current assets. Hmm, that's a bit odd. They seem to be doing this sort of business model with the current assets lower than liabilities. and it's working out for them, I guess. They're probably getting short-term debt. Yeah, probably. Don't really like that as well, but because let's say they want to pay current liabilities in full, they need to take 4 billion in long-term debt. Let's add that to the 7 billion. That's 11 billion, but they have 3 billion in free cash flow. So that's 4 years to pay everything. I mean, that's pretty good. What's the current liabilities? What's so high? Account payable. What's that? What does that mean? Account payable liabilities. So it's just, oh, they need to pay suppliers probably. Accrued expenses, whatever. Low, unearned revenue. What? Other. Sure. Just put other on it. Put other liabilities on 11 billion. Just like that. Yeah, they have. Okay, so other liabilities are still probably supplier. They need to pay suppliers. hmm This is the only thing I don't like about Lenovo so far. That current liabilities are higher than current assets. They have low long-term debt and other liabilities, 7 billion, and free cash flow is 3 billion, and if they continue to increase this. Another nice thing is that the capital expenditures are low compared to the cash from operations because you can also get 3 billion of free cash flow if you have, let's say, 13 billion of cash from operations, but you have 10 billion of capital expenditures. That's don't really like that. I don't really like that, and I do actually own a company that has that scenario, and Vodane, no, it's Vodafone, and I'm not a big fan now that I know more about this stuff. Actually, no, it's not that high compared to the cash from operation, but it is still pretty high. And it's consistent. That's at least that's quite nice. They around 6 billion of capital expenditures. Yeah, by the way, Vodafone has a lot of cash flow. Look at the last year, 14 billion was the market cap. 41 billion. I mean, it's pretty nice. Wait, is that right? They have it again a foreign company for the US, so free cash flow trailing 12 months, 10 billion. What the heck? Here's market cap 45. I'm a bit confused right now. They are 42 billion. This is probably not right. Let's check the free cash flow. Yeah, so it's probably closer to the 9 billion. I'm curious, what's with this second alpha data? This is, I mean, it would be nice. Let's actually go to the website and blah 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 blah. Where's the PDF? That's what I want. Where's the PDF? Is it this one? Can I search free cash flow? Million euros. Blah blah blah. That I just want the good PDF. I don't want a presentation. Where's the spreadsheet, maybe? Oh. This live is pretty long now, so we're probably gonna end it soon. So what's going on here? Freak. Are probably two different stocks. Let's call it, it's 5 billion. I'm a bit confused right now. These analysts do say that it's undervalued, but that's why I like US stocks a lot better, because they have better data overall. So they're saying they had 5 billion in free cash flow. Okay, well then. Oh, this is what I'm looking for. Free cash flow. Cash from operating activities, less so for expenditures. Expenditures. Okay. Yeah, 5 billion. Something's really odd with them. Where is 5 billion pounds maybe? Euro. Okay. 5 billion euro. It's how many dollars? 500? Got him. No, it's 5 times, what was it, 1.6? Yeah, let's call it $6 billion. So it's a bit odd. Let's leave it at that. But the second alpha, it's overstating by a lot. Jesus Christ. Or they are just two different. Yeah, I mean, you have the share on the New York Stock Exchange that is $15, and the share on the London Stock Exchange, Vodafone Group PLC, whatever, same company should be, right? This is 109 pence. Or pennies, whatever, cents, British cents. It's £1 basically. So what's, I don't know, GBP, USD, 138. 1.09 times 1.38. $1.5. Okay. So yeah, the share on the uh, Nasdaq is $15, and the one on London Stock Exchange is $1.5. They do move pretty much in tandem, yes. I need to dig in more in the free cash flow data because it's quite odd. Like it's different on 4 sites, and probably the accurate one is what they are reporting. 5 billion. It's also the most conservative, but even then, 5 billion, and the company is, call it worst case 45. I mean, it's 5 billion euros, so $6 billion, and the market cap is 45. So 45 divided by 6 is what, 7.5. Oops. Yeah. Still a good multiple for the cash flow, but they do have pretty bad. What's with this PE? What? I guess that's accurate. Decreasing revenue. That's not ideal. I mean, it's decreasing. It's decreasing in euro. Or, yeah, decreasing in euro, but constant pretty much in US dollars. Mm. And the thing I don't like is they're they have a lot of debt. Total assets. Yes, that's okay. Total liabilities minus the current 114 minus 43.65. They have 80 billion of dollars of long-term debt. So let's say they have worst case scenario $6 billion of free cash flow. 80 divided by 6. Yeah, that's a lot of debt. I might get out of this position. This is too much debt. Mhm. Yeah. Bitcoin 63K. Looking good. So yeah, I'm gonna end the stream here. Yes, thanks for watching to the 3 people that checked my stream, and I'll see you next time. Bye.